Income, funds, money, assets, resources, capital, you get it. Income investment can be the best choice if it's financial independence that you seek. If you are looking for the ultimate passive income, this dividend video is the one for you. As such, I will help you guys fine-tune your investing portfolio by giving you the blueprint I used to accumulate the health that I am enjoying today. Make sure you stay until the end because I will be providing some tips for beginners in income investing. Building a portfolio of investments with enough profit potential to provide regular income is known as income investing. Your portfolio consists of safe and trustworthy assets with a lengthy track record of stability rather than the hottest new stocks. Income investing is when your investment opportunities provide a regular income for you. Assets like resources like dividend-paying stocks, bond yields, and interest payments are examples of possible income investments. This facilitates the creation of passive income streams or revenue derived from the ownership of assets. Adding income-generating assets to your investment portfolio is possible in a variety of ways. Because it may provide income, purchasing real estate or real estate investment trusts is regarded as an income investment. The same is true for equities that pay dividends or give money back to shareholders. These segments frequently fall short of the goal when they should. With middle-aged people first contemplating investments or elderly people obliged to budget and develop the discipline they lacked as young adults, you cannot invest what you do not have. Therefore, income is the obvious place to start when making investing plans. The first employment of a young adult serves as a wake-up call, requiring choices concerning IRA contributions, savings, or money market accounts, as well as the sacrifices necessary to reconcile rising prosperity with the demand for immediate satisfaction. During this time, do not stress out too much over setbacks like feeling overwhelmed by your vehicle and school loan payments or forgetting that your parents no longer pay the monthly credit card bill. There is never a bad time to start investing. And before you realize that life is going swiftly and that you need to make arrangements for retirement and old age, you can be well into middle age. When setting investing objectives too late, it could be quite stressful. But once the strategy starts bearing fruit, there will be nothing to worry about. Regardless of your age, income, or mindset, always keep in mind that all investments begin with the first dollar. However, people who invest for a long time have an edge since their wealth grows over time, enabling them to live a lifestyle that others cannot. The need for income has always been great among savers. Bond yields are also near record lows at the moment, and when interest rates rise, bond investors may experience losses if the value of their securities declines. Finding a location for their funds to go where they may earn returns that outpace inflation is a frantic search for many people. Diversification is the key. Like other investing strategies, an income portfolio will gain from extensive diversification across asset classes, regions, and industries. Having numerous sources of income can also assist your portfolio generate revenue in a variety of market environments. Recognize distributions. It is crucial to comprehend the foundation for payment distributions when selecting an income investment. Is there a target distribution for the investment? And if so, how is it paid? Is this distribution level sustainable? And in the event that markets decline, would your payouts be paid from capital? Consider fund performance. Regular dividends and fund performance are not the same thing. The engine that generates income is your underlying capital base. And if you ignore it, you risk falling short of your long-term investment objectives. Remember that total return is important. Capital stability and income growth will be well balanced in robust income portfolios. Your capital base will continue to expand as a result, helping to raise your overall level of your real income. Despite the fact that many conservative investors focus on income stocks, individuals who can and/or want to take more risks can be better suited investing in growth firms. Growth stocks, as opposed to income stocks, frequently do not pay dividends. In order to increase future sales and profits, firm management frequently chooses to reinvest retained earnings into capital projects. In order to launch a new product, For instance, a recently listed technology company may decide to hire a new team of engineers or devote all of their resources for 1 or 2 quarters to it. This requires not only technical know-how, but also strong marketing and sales capabilities, as well as significant customer experience to address queries and concerns and assist with troubleshooting. Growth stocks have the potential to generate substantial financial returns, but they are often riskier than income stocks. In order to get a return on their investment in growth stocks, shareholders must rely on the business's investments paying off. Shareholders may lose money if the growth of the company is lower than anticipated because of declining market confidence and falling share prices. Every investment option comes with some amount of risk. It is also the case with the income investing strategy. While the strategy follows the policy of maximizing income with the lowest possible risk, the income it generates comes with some level of uncertainty assigned to it. In the case of a poor investment decision or an economic downturn, the investment can potentially fall through, leading to a loss of income instead of income generation. Well, now that we have introduced the concept of income investment, I am sure that all of you are very much curious about these business stocks. So, we will be giving you 3 tips for beginners that can help you invest for income. If you are considering income investing, keep in mind that it takes time to accumulate enough capital to produce a steady stream of income. Having a clear and focused investment approach will save you from making impulsive decisions and will help you remain on track in the long run. Tip number 1. Build a bond ladder. By purchasing a variety of bonds with short, medium, and long periods, you may build a ladder. Every bond has a maturity date or the day on which the whole value will be returned to the investor. The majority of income investors need consistent, dependable payouts, therefore they often purchase a variety of various maturities. As each bond matures, you get consistent payments and the choice to reinvest at the current market rate. If you need cash sooner rather than later to augment your income, the shorter-term bonds you buy will provide you access to it when they mature. Number 2. Streamline your investing by using funds. Exchange-traded funds or ETF and mutual funds are the most economical investment vehicles for constructing an income portfolio for the ordinary investor. You may access a variety of securities and save transaction costs with the help of these funds. And last tip is that instead of focusing on short-term market fluctuations, consider your total profits. Whether the underlying asset is a stock or a bond, it does not matter as much as long as you are getting the income you want from an investment. There is less cause for concern if the market value of your investment declines somewhat, especially if it is a bond you want to retain until maturity, provided you continue to get a monthly income and there is no material change in the creditworthiness of a borrower. A variety of income sources that are suitable for your objectives, timeframes, and risk tolerance should be included in your portfolio. And that is all for today's video. Thank you so much for watching and for investing your time into what we've put together with great enthusiasm. Feel free to give this video a thumbs up and please do subscribe. It would be of immense help for the channel. Until then, this is Dividend Bear. See you guys